Hi, how are you? In today's video, we will be discussing about the price action of Nifty and Bank Nifty, and we will see what were the important levels in today's price action and in today's day how I initiated the trade. And I had put it on Telegram and Twitter that I had initiated a trade in Nifty. I went long, and I will discuss why I opened the trade and how I managed the trade. Now you know that I am a directional trader and I sell options directionally. So I take directional bets on the market and I do not work in straddles and strangles. So those of you who are watching these videos for the first time, let me tell you that uh, I trade on the 5-minute time frame of Nifty and Bank Nifty. You can see it here. And I trade purely on Nifty and Bank Nifty alone. I'm not a stocks trader. And basically I am an option writer, so I keep writing options on a directional basis. So whenever I see a particular direction forming in Nifty and Bank Nifty, I will take a long trade in that direction, and I do not do any firefighting. I do not open any straddles or strangles, and I do not do any adjustments. I simply take a trade where my price action is telling me and I exit at important locations. So now going to the price action of Bank Nifty. Bank Nifty opened below the CPR. You can see that this is the open, and you can see that this was the CPR on top here, and the CPR wasn't very wide in Bank Nifty, as you can see. And I had told you in yesterday's video that we have a CPR which is of higher value than yesterday's CPR, and the closing of the previous day is above its CPR. So because of that, what was my bias today? I was going to go long in Bank Nifty if price in Bank Nifty opened anywhere above the bottom central pivot, or as they say, the TC here. Now sometimes because of the calculations of the CPR, or many times rather, you would see that the BC and TC have swapped places, but that is okay. That doesn't matter as far as trading goes. The BC might be in TC's place, and so the TC might be in BC's place, but that is okay. And what you could see is the price action actually opened right above the Virgin CPR, an important level I had talked about from yesterday's price action. And for those of you who don't know what is a Virgin CPR, now this is the CPR of yesterday. And if you want to know what is CPR, you can go ahead and watch videos on my channel for CPR. And Virgin CPR is the CPR which forms after that day, which does not touch on which the day on which the price action does not touch that day's CPR. So you can see that this CPR is untouched. So that's why this CPR on the next day will be extended forward as a Virgin CPR. And what does the Virgin CPR qualify as? It qualifies as a very important support area. Now you can see immediately after the first candle, this was a second green candle that it formed, and it formed inside the Virgin CPR. You can see that S1, L4 are right at that level, and I had spoken about this in yesterday's video that L4 is right about at the same place where the central pivot of the Virgin CPR is. Now this was the central pivot of the Virgin CPR, so you can see how close they are. And whenever you see two pivots being together, the confluence causes a big strong level at that particular location. So this confluence should have acted as a strong support, but Bank Nifty went right through that support, and in fact it fell right down to S2. Now can you see any sort of reversal price action pattern in this area? There is none. And I waited for a reversal price action pattern in this candle. I waited for a reversal price action pattern in this candle. I waited for one since the price action actually opened, since the first candle itself, since the first 5-minute candle itself. I was waiting, and this was not a particular reversal pattern because the L4 was not hit by that time. So what would have been a reversal price action pattern? Had price actually made a particular green candle after forming this doji like this. So after this particular doji, if now this is a green doji, correct? So after this doji, if you had seen a green candle close within the body of the previous red candle, then a long trade would have been initiated in Bank Nifty right at this moment. But price action did not show that, and Bank Nifty kept breaking that particular level. And then later you can see how Bank Nifty reversed from the S2 pivot onwards. But now let's go to the Nifty time frame, or rather the Nifty chart, and I'll show you what happened in Nifty here. Now Nifty showed us on the 5-minute time frame exactly what I was talking about. I had said in yesterday's video that in Nifty also we will have a very important level tomorrow, which was the Virgin CPR, and you can see here that only wicks are touching that CPR, but no candle body is inside the CPR. So this will qualify today as a Virgin CPR. So this is a VCPR for today. And when Bank Nifty was falling, Nifty was also starting to fall, and you can see the size of these red candles. It went falling right down to the L4 S1. Now what was an important point here? An important point was that the CPR for today was of higher value as compared to yesterday's CPR, and the open was also above the current day CPR, and the CPR today was very narrow. Now look at the power of CPR. You have a very wide Virgin CPR on the bottom here, and you have a very narrow current day CPR. So what does this current day CPR indicate to us? That the day might be a trending day. It could be trending to the upside, or it could be trending to the downside, or it could trend to the downside and to the upside, or it could trend to the upside and then fall to the downside. That is fine, but at least it tells us that most likely there will be a trend in the market and it will not go sideways like this, most likely. So 70 to 80% of the times that will be the indication that the or the narrow CPR will give us. And once the price action opened above this particular level, I knew that my bias, which was initially bullish, was absolutely confirmed by Nifty. And if you want to know why the bias, what is the bias and why the bias is confirmed, you can go and watch the video that I have made on the power of CPR. A few days ago I had made this video, I had released it on the channel. You can go back and see that video. So now what can you see here? You can see that there's a big fall initially, and then you can see that exactly at the confluence of pivots here at the S1 L4. Now what is L4? L4 is the Camarilla level, and it is the last level of support for price. Whenever price opens within value of the previous day, this is the value of the previous day, right? So it has opened within value of the previous day. Then if it starts to fall, then L4 will be the last level of support, and H4 will be the last level of support for, resistance. So this is the last level of resistance, and this here is the last level of support for price. And if price breaks through that, very often it will keep going to the downside, and if price breaks through H4, it will keep moving to the upside, at least till it reaches the H5 and here the L5. So now what do you see here in price action on this day? It opened, it kept falling, it went beyond the L4, and I was waiting at this level because I knew that there was previous day's supply zone at this level. Why? Because price had gone up from there up to this level, correct? Plus the S1 pivot, which is the floor pivot, plus the L4 pivot, which is the Camarilla pivot, and the big Virgin CPR. And that's the big brother of all supports and resistances. And later, once price went right through the particular support here, you can see how it went through it, and then it formed this particular pin bar kind of pattern, which was a hammer pattern, and then a follow-up candle, which is my confirmation candle. I never trade without a confirmation candle. Even if it's a long tail hammer candle, the second candle here, rather the first candle in the formation, I always need a confirmation candle, which is a green candle closing above the high of the previous green candle. So that is my price action pattern, and it is one of my pet patterns that I use. And so I went long here, and I had sold the 17,750 put. Why? Because the price was almost nearly at 17,750. It was at the money that I had sold. I wasn't getting much premium at the 17,700 strike price. You can see that 17,700 was down here, and I wasn't getting much premium. It was barely 30 rupees at that time, but I got 52 rupees at this point. And then once I went long here, my target was the H3 level. So exactly when price came to that H3 level, you can see that at around this candle, which was the 12:20 PM candle, I had booked it at 12:23 PM at 27 rupees. So I had written the option here at 52 rupees, which I covered at 27 rupees, and here was where my stop loss was. So you can see this is the entry, and this is the profit. So you can see how I maintain a risk reward here. You have to have a larger reward than the risk you're taking. So you have to understand that your risk has to be smaller than your reward. If you maintain a 1:2 risk reward, then every time you're risking 1, you're gaining you're aiming for a 2 rupee target. And you must see that there are this kind of a trading balance you have to maintain. So every time, even if you maintain a 50% win rate, that means that if you lose out of 10 trades, if you lose 5 trades, you're basically losing 5% here. and what are you gaining? Your gain is 10% because you're making 2% every time you gain. So your gain or your profit is 10%. So in net, you are winning at 5%. So this is your net profit. This is a very simple equation, and I hope you understand this equation, and I hope the reason behind this trade is clear to you. And here you should not have any emotions. Okay, so once you enter the trade here, your target should always be reached by you. But it's not necessary that the market will reach it every time, but you should not get out at these consolidation levels. Your mind will keep telling you that you have to get out at these levels, you should get out at this level. Every time it makes a red candle, couple of red candles here, a red candle here, a red candle here, it will tell you that you should get out of the market because, or out of the trade, because this might reverse against you. Why should you worry? Once you are in the trade, and once you get about 1:1, trail to cost. Okay, trail to cost, and ensure that your stop loss from here comes here. So this is your trailing stop loss, and now you're not going to lose anything. So once your price has reached 1:1, so if it gives you 1:1 risk reward, trail your profit to, or your stop loss to cost, and by that means what will happen is it will take away your fear in trading. Now you know that your target is H3. Now immediately after price touches H3, you can book your profits. And another reason why I booked my profit there was because at around 12:20 p.m. you can see here in this candle that 12:20 p.m. that wick was coming up to the central pivot of Bank Nifty, and Bank Nifty you can see had shot from this point onwards, right? So at the central pivot there was a high chance that the price might have taken or could have taken a strong resistance and fallen from there. So that was the reason why when Bank Nifty took to the central pivot, or it reached the central pivot, and at the same time Nifty reached the H3 pivot, I knew that that was the time that I was supposed to take my profits off the table. So that is why I booked 25 points in Nifty today, and the initial stop was 12 points. So you can see that I have scored a 1:2 risk reward here. Now depending on today's price action, what kind of levels do we have tomorrow? So now what we can do is we can remove this Virgin CPR box from here. We don't need it anymore, and we can see here that there is a nice bounce from the bottom, so we can mark the low as a demand zone. And let's just turn on the next day's levels. You can see here that we clearly have a higher value CPR, but the CPR is very wide tomorrow. You can see the width. Now you have to do the width analysis also. Okay, so look at the look back period, how narrow is this CPR and how wide this is. So you will very likely see a sideways or a range bound day tomorrow, so plan your trades accordingly. You can see that we have a confluence of pivots again tomorrow. Within the Virgin CPR we have the L3 support here. This is the L3, that is the candle level. All right, so those of you who are questioning me what the levels H3, L3, H4, L4 are, those are the candle levels. So this is H3 and this is L3 and this is L4 and this is H4, and this particular level is the CPR. So you can see we clearly have a particular higher value CPR tomorrow, and if you want to see the third layer of Camarilla, this is the third layer for tomorrow. So that is also of higher value, although it is overlapping higher value. So how do you recognize, or how do you analyze this sort of price action tomorrow? So any opening above the bottom central tomorrow will be a buying opportunity for you, and the open should ideally be above the L3. So it should be above this level, and then what would you do? You would look to trade a pullback to the L3 level here or the bottom central pivot here. Anywhere you get a pullback, you may look to buy this market. And we will also mark this particular zone as a demand zone for tomorrow. And now let's check Bank Nifty. We can remove the Virgin CPR, and we will mark this particular, we'll just extend this particular zone forward, and we will also mark a demand zone in Bank Nifty. If price comes to that level tomorrow, you are not supposed to keep any long trades open. And let's check in the next day levels, what do we have here? So again, we have a wide CPR in Bank Nifty, and let me explain this to you now. We basically have an outside value CPR in Bank Nifty. So what does an outside value CPR suggest in a two-day relationship? It suggests that the market will most likely trade within the high of the previous day and the low of the previous day. So this will be the range of the next trading day. So the next trading day will most likely trade between the 42,900 and the 42,440 level. So round about 42,440, let me just write it down for you here. 42,440 and the 42,900 should be the range for tomorrow's trading. So you can trade anywhere between this range here. So this is 42,900 here, right here. So that is going to be the range for tomorrow, and most likely price will tend to trade within that range. You can see from the third layer of Camarilla, if we mark this particular layer and the third layer here, we can see that it is elevated, it is higher value, and it is overlapping also. So as far as Camarilla goes, we do have a bullish bias, and as far as the CPR is concerned, we see that the CPR is engulfing the previous CPR. So the market will very likely be content in trading within the previous day's range itself. So a range extension, that is a breakout tomorrow, might not be on cards, very likely might not be on cards. And tomorrow we also see a confluence of pivots here, which is a golden pivot zone, and we can see that the L3 level is here, the L4 level is here, the H4 level is here, the H3 level that is, and the H4 level is up here. So any open above the L3 level tomorrow, above here, and you will look to buy that pull back to the L3, you can buy here, and then your target will be the H3 level. So what will be the target level at? It will be somewhere around the 42,954 level. So I just said that the 42,900 will be the range, right? So yeah, you might look to book your profits at the 42,900 level itself tomorrow. Don't wait for the H3 level to be achieved. It might not come tomorrow. Any spike in price might take price to that level here, but it is not too prudent to keep your trades open just for 50 points in Bank Nifty. If you are in a good long trade right from here, it's best that you target for the 42,900 level. So this should be your target for tomorrow's long trades. Don't wait for the H3, which is at this level, because we have a very wide CPR and we might not have a wide ranging market tomorrow. We might have a narrow ranging market. So just ensure that you don't keep your trades open for too long tomorrow. We might not see a big range like this tomorrow, very likely. So guys, I hope this explanation is good enough for you and you have liked it. And if you have liked it, then please give me a like and subscribe to the channel, and also hit the bell icon so you don't miss a single upload. And please share these videos with your friends so that the channel also grows. Thank you guys. I'll catch you in the next one. Bye bye.